So a friend of mine cottoned me onto something pretty interesting today, which is that Melvin Capital Management, which is a multi-billion-dollar hedge fund, is having to be bailed out by these other two hedge funds to the tune of $2.75 billion to control for 30% losses in 2021 so far. And the reason for this is pretty funny. So, buried in Reddit, the seeds of Melvin Capital's crisis, retail investors plotted online to take down Gabriel Plotkin's hedge fund, and now Citadel and Point72 have thrown in a lifeline. So essentially what's happened is, they've tried to short sell GameStop stock, or GME. Now, what short selling is, just to give you a basic understanding of what this means, essentially you borrow some stocks of a thing from a broker, and then you sell them at market for such a value, then buy them back, assuming that they're going to lose value, then buy them back from the market at the lower value, therefore making you profit, and then you give them back to the broker. Now, by borrowing off the broker, you have to pay a rental fee on the stocks themselves, but as long as you make more from the buyback than you did from the rental fees, you make a profit, right? But if this doesn't drop in value and it actually raises in value, you still need to give these shares back to the broker. So if then they raise in value, have to buy them back, thereby costing you money. So if some other nefarious investors come in and then deliberately increase the stock value, you can make huge losses because you've made a contract with this broker to be able to return the stock to them, plus however long it takes you on rental fees, right, to be able to give them back the stock that you bought and that you tried to short sell. So if we go back here, thanks to the retail investors posed a Reddit forum broadcasting their intentions to take down prominent but reclusive hedge fund called Melvin Capital, and doing so by buying call options on video games retailer GameStop, a stock in which Melvin had disclosed a big short bet, because there was some legal restriction, but they had, with these kind of short bets, they have to legally disclose them. So essentially, if we go back, this is the subreddit that's been doing it. It's called Wall Street Bets. And essentially it's a bunch of small-time investors, which originally was just sharing like market tips on how to make money on the stock market, and then what they've sometimes changed around into where they are trying to massively tank these big hedge funds that have so much market control through nefarious dealings on the stock market, which I'm all behind. These big hedge fund managers that do nothing. They do literally nothing to benefit society. Getting tanked by small-time investors makes me happy. I like to say that does make me happy, and this is how they did it. So, of course, the reason why they would choose GameStop as a stock to short sell on the assumption that the stock price would fall is because obviously they're already in decline due to changing market trends in how we purchase games online more often rather than using the brick and mortar stores that a lot of their stock was invested in, or a lot of their stock relied on for its stock value with these brick and mortar stores that GameStop has, which then also further was compounded by the issues surrounding being a retailer during COVID-19. And then what the hedge funds have then done is then short the stock on these to take advantage of the fact that they've been tanking, essentially hoping that they're going to go bankrupt and then make an absolute killing on reselling these stocks, right? Okay, so then when they've noticed the intention to short sell these stocks, what they've then done is they've then mass bought the stocks of this particular of GameStop here. They've mass bought the stocks at this low value, and obviously supply and demand, as more people buy the stocks, the share price increases. So as you can see here, not only by a temporarily small increase on prices, then led more people to then do the same thing as the stock, as the people see the trends of the stock increasing, more people then get in on the investment game, as they say here, like people like billionaire investors, and then obviously funds, boomers, they all look and see the increase in share price or stock price, and then you watch the actual price increase, thereby massively impacting the intention of the short sell on behalf of Melvin Capital Management in this particular case. And now they bet on the wrong side of a now resurrecting company. Short squeeze means the hedge funds must pay up to for their bad bet, for which they're now upside down, because they have to refill the loan that they were promised to this broker, plus any rental fees on top of that as well. And obviously, as of this writing, hedge funds double down and bail out the primary shorting firm Melvin Capital. Sketchy implications abound, as one providing the bailout is a firm that is a market maker who essentially runs the stock market, sets prices, etc., etc. So this is great. I wish we could be able to do this more often. It's a really interesting leveraging of essentially collective power to attack single figures who do a lot of economic damage. And this is really, really cool. I'm very thank you much to Reese for pointing this out to me, which is interesting as he's very much a capitalist. That we agree very much on this issue, because if you're a capitalist, you should hate this kind of stuff. You should hate the people who who they don't make the market any better. They just make money off nothing, right? And just essentially gamble away. It's essentially like a reverse trading places. So obviously, in trading places, it was the opposite, where they expected the price to rise. They did futures contracts based upon the faulty crop reports that they were given, and then Winthrop and Winthrop Valentine, there we go. Then they short sell on the knowledge that they have the real crop report, and knowing that the price is going to tank when they know that the market's going to be flooded by the good harvest. So it's essentially the opposite of what happens in trading places, where small time people essentially manipulate the market in such a way as to lead to poor outcomes for these large investors, which I found very, very interesting. And they're not just stopping here. They're also looking at something like BlackBerry and other things that are being short sold, and then trying to attack these large hedge funds on behalf of that, which is good. And then the best part is now that because of this, this concerted effort to buy up stock and increase the stock value, these people are probably going to make some money down there. Maybe not a lot of money, but at least some money. So yeah, it's a pretty interesting situation that's happened here. I encourage you all to look into it. And yes, about 2 months ago, a Reddit user called Stonks Flying Up and said the GME squeeze and the demise of Melbourne Capital. So they clearly have the intentions of tanking these people, which is funny. If not prudent. So it's almost an argument that the idea that we base a huge part of our economy on people making like random bets against values of things when they're drunk is probably a bad way of stratifying the economy. Possibly, and allowing people like Gabe Plotkin, the guy from Melbourne Capital, to make huge livings off essentially doing nothing and essentially tanking other people's businesses, or hoping other people's businesses are going to tank at the very least. So I've been No Justice. This has been an interesting one, a little bit different to what I would usually cover. I'm not really massively au fait with economics, but I like to think that something very interesting, like we got the people power and the collective power that can be used with the internet to be able to enact, huge changes like this. It's very interesting to follow, and I will definitely be following the future of this particular subreddit moving forward. So yeah, I've been No Justice, and I'll see you on the next one. Please like, comment, and subscribe.